Canada's population declined by more than 100,000 people in 2025, and this is the first annual population drop on record going all the way back to the 1940s. To put that into perspective, Canada went from growing by about 1.2 million people per year to losing roughly 100,000. And if we look at this point right here on the chart, it marks the first annual decline since records began after World War II. Now, this is a big shift from what we saw in the years like 2022, 2023, when population was growing at above 3% annually. We've now seen 2 consecutive quarters of population decline. And according to economists at BMO, population growth is expected to hover around 0 through about 2027 before eventually stabilizing at just under 1% growth per year. What we're moving into now is really an era of normalization. The federal government is also trying to reduce the share of non-permanent residences in the population from a peak of about 7.6% down to a target of about 5% of Canada's total population. Now, the place where this shift in non-permanent residence is showing up most clearly right now is the rental market, which has been softening pretty quickly. My personal take is that this kind of population adjustment was inevitable. The pace of population growth we saw in 2022 and 2023 was putting enormous pressure on housing, healthcare, and infrastructure. And at one point, we were seeing rent increases of more than 10% per year, with most rental listings in Toronto getting multiple offers. Many new immigrants simply could not find a suitable home. And now that population growth is slowing down, housing supply has a chance to catch up, and we've already entered a more balanced market in Toronto. Now, in the short term, slower population growth could mean slower economic growth, but longer term, it likely sets the stage for a much more sustainable economy.